Hi, it's Larry Gaines, Power Cycle Trading. In this video I want to show you a trade setup that we identified this past Saturday in our boot camp. I did a boot camp Saturday on day trading using the Power Cycle Trading model and our scanner tool. So one thing that we incorporate into our trading is scanning for what we call the volatility breakout type trade setups. And with this proprietary screener or scanner that I put together, I can scan over hundreds of stocks looking for a certain specific type of setup that we call a volatility breakout or squeeze. So one that we recognized on Saturday was price line PCLN, and you can see here it triggered on the daily, but it was in some major volatility compression squeeze on a lot of different time frames. So it looked perfect for a big blowout push to the upside Monday morning. So let me show you that trade and how it set up and went today, Monday. Now we were looking for setups that would be potential kind of a day trade candidate, so you could get an explosive move to the upside and capture the profit in one day. But another great thing to do is what we like to look at is something that could also turn into swing trades. So if you've got the underlying core of a trade setup where it could be a swing trade, but it also has very compressed consolidation in the shorter term time frames, it makes it ideal for the day trade setup where we can get in and out in one day and take big profits. So what we were doing was scanning over a 30-minute time frame, 60-minute time frame, and further out. So here's a 30-minute scan. This is just by volatility breakout. You can see it's in a compression squeeze based on our trading model, and this started like on Friday. It was in the squeeze all day Friday, and then that was on the 30-minute, and then we also had it in a squeeze on the hourly. You can see right here the hourly time frame, and then looking out, it's in a squeeze on the weekly, and it's also in a squeeze. It was in a squeeze on the daily. So it had a lot of potential for a huge move to the upside. Now our indicators, you then ask the question, well, how do you know which way it's going to break? Well, we use our lower studies to tell us the direction. So my cycle 1, cycle 2 indicators were up on the daily, so the probability was for this to break to the upside. On the 30-minute time frame coming into Monday, the cycle 1 indicators were up. And then what we did in Saturday's class, we mapped out, okay, what trade opportunities should we look for? And we set up the different trade setups to look for on Monday morning. So you can see here it broke just right on the open, straight to the upside, never looked back. So what we ended up doing was you had to put this trade on quick. I missed right on the open, so I got in about 8:45, and I just sold puts, and I'll show you some of the other trade opportunities. But what we also did was we mapped out potential target zones for price line using Fibonacci. So you can see here from this high to low, my extensions for potential profits were at the 1272 extension coming in at 1281, and then all the way at the 1618, which had hit at 1304. So on Saturday we were looking for targets. We were looking to do, say, bull put credit spread in the money at 1260, 1255, or by the 20 delta weekly options that were the 1272 calls, which were going for at that time $4. And let me show you how these trades turned out. Now the first trade setup that we discussed was buying 20 delta weekly options. So that would be the 1272 and a half calls, and these on Friday were going for as little as about $400 per contract. So the reason we picked those is because one of the major target zones was 1260, 1265. So and then we had also 1270 and 1275. So pick the upside target range, and if price line gets going, it's easily can hit those targets. So these were going at $4, around $4 on Friday, and this morning at 8:30, 8:45, these could have been bought at anywhere from $510 to $675. Shot up here when I took my credit spread, bought my puts back in. That was at about 11:30, and at that time it was at $17 or $1,700 contract, and then it got to as high as $25 or $2,500. So this trade here, the 20 delta at the early part of the day, max profit was about right here was about $1,190, and up here, if you'd taken it off, that would have been close to a $2,000 profit, and that took about, that was at 9:45, 11:30, about 2 hours, 2.5, 3 hours on that kind of trade. Just a huge move to the upside, never pulled back. So, when you get these volatility compression squeeze, there are huge movements to the upside. And the one that I did was just sold puts. So I just sold, towards the opening of the day, I sold the 1252.5 puts, collected $930 per option contract, and then took those off down at 360, so made $570 per option contract, and they got down to as low as about $200. So great trade setups. If you'd like to learn more about it, I'll be doing a webinar, and I'll tell you a little bit of detail about that. Now this Wednesday night, August 6th at 8 p.m. Eastern, I'll be doing a webinar, Insider Secrets for Technical Trading Profits. And in this webinar, I'm just going to go over trading systems, how to use them. I'll also talk about these volatility compression squeeze type trade setups. Also how to use support and resistance, how to use Fibonacci support and resistance. We'll go through how to use Fibonacci for reversals and price targets, how to set those kind of targets, how to identify and trade trend breakouts, how to really get into the defining a breakout and getting in early and not having any equity go against you. How to identify market tops and bottoms, which is really important in this kind of market, and a lot more. So if you'd like to join me, it's going to be this Wednesday night, August the 6th at 8 p.m. Eastern. It's a free webinar, so come join us, and you can register at the bottom of this email. Thanks. Good luck trading.